CEO and CIO of Marathon Trends Advisory, joins us right now on the show. Atul, so good having you. Thank you so much for taking the time out and being with us. Much appreciate this. What explains the kind of literal meltdown that we're seeing at the broader end of the spectrum today and over the last few days?
I think that obviously the starting point was concern among some of the leading voices that there were excesses and there was a need to reduce the fizz that is there in this space. Obviously, where I think the impact or why, when I look at the screen, the thing is that I feel that there's been a lot of retail and HNI money which is leveraged and has been participating or enjoying in the small cap and mid cap rally, more so in the small cap spaces. So when I travel, meet a lot of HNI investors, I find that all of them are very, very active in the market. They have all taken leverage and they are all into the small cap space because the returns have been phenomenal. And, when the markets fall at this pace, very often that leads to liquidation. You saw that in the case of IFL, you saw that in the case of JM. When these stocks sell, somebody has to pay the price somewhere and some margins get offloaded. So what you see on the screen is not a exit that is happening at a price, that is an exit happening at any price. That is why stocks are falling. And this kind of selling generally happens when liquidity or leverage is something that is getting unwound. So I think it's more, I don't think there's any panic system-wide or at the institutional level, etc. I think that wherever there is leverage in the system or excesses, that is definitely capitulating. And here people feel that, that yes, they are still in the money, may as well take whatever there is and exit. That is why you'll find stocks like the PSU stocks are taking it really hard, is because you realize that most of these stocks, they were never really large institutional stocks, but this is where the retail was, making merry. So that is why you'll find that the hits also are more in those spaces. The large caps, the stocks that have actually not really moved, which were never part of the party, which were never part of anybody's trading book, are actually holding out, of course, with small losses, but not the kind of deep cashes that you're seeing in some of these other stocks.
Atul, you combine sentiment, fundamentals and technicals with aplomb. What does the screen tell you about the likely outlook in the very short term? Because some people are also calling this a March end phenomenon too. I'm just trying to understand, how are you thinking about what happens in the near term?
So I feel that there could be some pressure for till the result season comes in. That would be starting mid-April or thereabouts. The reason, the quarterly numbers. The reason is that I feel that a lot of the small caps and all are reporting good numbers. It's not that this thing is just a pure bubble. A lot of these companies are reporting good numbers, and with the GDP growth coming at 8%, etc., I think that the quarterly numbers coming out will be pretty good. At that stage, you will find that a lot of good quality small caps could have corrected 10, 15, 20%. And when they come out those phenomenal numbers, I feel that they will also do a catch up that fast. So I don't think that fundamentally anything has gone sour. Global markets are pretty strong. The larger picture remains strong. Yes, what I feel is that the liquidity that is there, which is leverage, is getting slightly squeezed out. And this will result in a lot of stocks getting 15, 20% cheaper. If they come out with good numbers, I feel that these stocks will recover. Yes, in the short term, there will be pain, whether it's due to 31st March or, what do you call, like a buyer strike or something like that. But this is something which will be more short term. And for those people who are sitting on the sideline, I think it's a great opportunity. So I don't think that small and mid cap are a bubble or, it's topped out, etc. We will not see these levels. I find wherever the earnings will come, in fact, these stocks will also recover equally fast.
Got it. Atul, so that's the other question. Whether you were sitting on the sidelines completely or partly, just trying to understand, are you sensing an opportunity currently, or do you believe that tactically, if you want to play this, then you might get better opportunities as well? I know timing the market is maybe not the best thing, but for catching the falling knife also isn't. So I'm just trying to understand, how are you thinking about that aspect?
No, it's difficult to say that, this is it, etc. As I said, that there will be, I think, little more pain or little more consolidative activity that will take about a month or so. I feel that once post 15th April, once the quarterly numbers start coming out, I think as and when whichever company reports decent numbers or surprises on the upside, that will also recover very fast. So it's difficult to say where the bottom is. I think this will just take some time, because this, will first and foremost, the poison will have to come out, which is a leverage. And then the market will spend some time consolidating, absorbing this kind of hit, because the hit is massive. And this breed of people who, are new to the market, who have been very active, will take time to reorganize and come back. So I would think it will take a month and a half. But there is, I think, no major crisis, because I still feel that these stocks will do well. Wherever they are backed by earnings, they will recover. Yes, speculation leads to its little bit short-term issues, which is on right.
Okay. Last question, Atul. There could be a month-long corrective move, maybe sideways, maybe down for the large cap end, because that's where the safety is being seen. But there too, the valuations are maybe slightly above what averages have been. So could the small cap pain get extended to the larger end as well? I know it will fare well, better than the small caps for sure, but could that also come under pressure?
I don't think there will be a lot of pain, because a lot of these stocks had not done well. See, they have been lagging for the last 6 to 9 months. And that is one space where there is not much leverage, really. And that is why you'll find that those stocks where there is not much leverage or which haven't done, actually also are not falling much. Yeah, they will slip slightly with the broader sentiment for sure. I mean, where they were in the opening today to where they are right now, they have all slipped slightly. But I don't think that, there is any amount of euphoria, froth. And as I said, the underlying theme that I am seeing, or what's playing out, is the leverage that is there, especially among the small players, among HNIs, who have, taken leverage to the hilt. They are actually liquidating. And wherever those plays are there, that is where the pain is in the short run.
Point noted. Atul, before we let you go, any pockets that you would keep a keen eye out for, wherein you believe that you would want to park money once the dust settles?
I think capital goods, engineering, I think the whole capex cycle play still holds. And a lot of these stocks are already 10% lower. Maybe they fall another 10%. Who knows? One doesn't know. But I feel that these companies will come out with good numbers. And if that being what it is, and they were, say, 15-20% cheaper, I think that they will find buyers at lower levels.
Got it.